Okay, so this is the first video in quite a while, but I had a few good setups on Australian dollar, US dollar today, and I wanted to go over one of the setups today. So we'll start off, we're on the 1 minute chart just because it's easier to break down the price action, and we'll get right into it. So as you can see, you've got the Asia high. I've obviously got it annotated, the setup already, but I'll go through it with you to try and explain it, so stick through with it. So you've got the Asian high. This is sort of going off the ICT concept of the Judas swing, if you're not familiar with it. Basically you'll use the Asian high during the London kill zone and trade away from it. So I'll play it forward. So we get the sweep of the Asian high at 11 minutes past 9. So then that's a sweep, and we keep going. So what we'll be looking for now would be a change of character, but as you can see from what I've put, price was printing strong bullish price action, keeping me out of the market until I identified the confluences I want to see. So as you can see, we've got break of structure followed by new high created, pullback, which is, this is sellers entering the market. So sellers, and this is building liquidity, and then here we're having buyers entering. So you're getting stop losses placed here and here. So that's a good sign, you're generating liquidity. And then here is where it gets interesting. So here, as you can see, I've got the red line. We have a high is printed, and then we then break that high. This creates London high of the day for the 13th of November, and then this would be our most recent fractal low here, and that is what we'd be looking for to be swept now before this high is taken, and that would create a change of character. So as we see what happens, we sweep that. So this now is a valid Judas swing for us to take. So we've swept that, which means we've got the change of character, and at this point the closure of this candle confirms the change of character and allows me to identify fair value gaps for entry. So as you can see, we haven't got any fair value gaps here. The first fair value gap we have is this one here, as I've identified. So what you'd do is you would set your trade like I have at the open. Obviously you're quite likely, the fair value gap was identified, and due to this being a very quick reaction and it's very close to the fair value gap, the fair value gap was very close to the change of character. So I would enter the market using a market execution order to avoid a missed opportunity. So I would probably enter as soon as we get to the open of this fair value gap. Sometimes you can enter at like the halfway point here, or some people prefer to wait for a full fill and will close. But obviously if you're entering at the open, you're going to get a lot more trades, which in turn will give you more losses and more wins because you're getting in more positions. However, if you enter at the 50%, you're going to reduce your trade, the trades you take, but then that's also going to reduce your losses and your wins. So it depends on your risk appetite as to what you want to do, but I personally would trade this from the open, and obviously enter the market as soon as you get that pullback. So this candle obviously pulled in and filled the fair value up, so all people would be tagged in this scenario: the people entering at the open, the people setting limits at the 50%, and the people hoping for the full fill. So you have your entry candle here, and then we can see what happens. So stop loss was obviously placed just above the most recent fractal high, which is 3 pips. Very small stop loss, obviously, because we're on the 1 minute time frame. You could have popped it up to 5, and that would cover the London high, which is a very good point to have your stop loss above, because there's lots of sellers in the market here. So you could have done that, and you'd still be quite easily targeting a 1 to 2 risk reward, which is what my fixed risk reward is, and you're still well within that to achieve that. However, I obviously had the stop loss just above the fractal high, 6 pip take profit, which fits quite nicely with the generated liquidity here earlier that we made from these breaks of structure. So you have some trendline liquidity there, which is nice to take, and we will show you how it plays out. And as you can see from the notes, if you did miss your first entry, a second opportunity did present itself here, where you have another fair value gap formed right here as identified, and all you would do is, again, say you wanted to join the market at the 50%, I would again be using this as I'd have a 4 pip on this, and I would use this fractal high still because it's holding liquidity and you know that it's a nice place to have your stop. I would then have 1 to 2 like so, and you could get a second, you could get your entry if you missed the first one, so you wouldn't have got tagged in at the 50% of the fair value gap. However, had you had it at the entry of the fair value gap, you would have been tagged in here. So as an example that you could have got in, but we'll show you how this trade played out. And it obviously hit TP for a 1 to 2, and throughout the rest of the day price did continue to drop over time, and the max TP for this trade could have been 5.5%. Obviously that's the max. I like to record in my journal what the max percent you could have got from a trade is, because then it allows you to work out an average. Say you're trading 1 to 2 and you're not recording your max. Say you get 100 trades and you've recorded your max, you can then work out an average of, say, 80 of these trades could have netted me 4% profit. Then you would be inclined to try and reevaluate your strategy and think, maybe I should put my TP, my fixed TP to 1 to 3, for example, or 1 to 4, because then you're going to increase your profit. Because like this trade could have run to a 1 to 3. It took its time, don't get me wrong, but you would have hit a 1 to 3 if you were just patient and stuck with the setup. Obviously it's hard to hold, there you go. So it's good, it's a good metric to track in your journal if you are. But that was a quick one. I just wanted to go over that because it was a very nice setup today, and it's obviously a Judas swing. It's quite a well-known strategy within the markets, and I definitely recommend you guys check it out. But yeah, don't forget, leave a subscribe, a like, and obviously check out some of the other videos on the channel that are doing quite well. And yeah, thanks very much.